Let's talk about the Federal Employee Retirement System, otherwise known as FERS. It's comprised of three components: the FERS Annuity, Social Security, and the Thrift Savings Plan. It's a three-part system. Each component is independent of the other, and you need to understand all three of them in order to be able to maintain your standard of living as you move toward retirement. To be clear, this discussion is for standard FERS employees. If you are covered under special law enforcement or firefighter retirement, some but not all of this is applicable to you. If you are covered under CSRS or CSRS offset programs, this discussion is not appropriate for you. The three parts of the FERS system are managed by three different entities, so it's important for you to understand who manages each part and that they don't communicate with each other. You need to understand the different components and what they're going to provide to you at the time of your retirement in order to plan ahead. The FERS program is managed by the Office of Personnel Management. Participation is mandatory. If you're eligible to be in the program, you are in the program. The results of your program are going to be based on how much you earn, the length of service, and how old you are when you retire. There's a lot of moving parts. We're not going to discuss those here. The Social Security Administration administers Social Security. Again, participation is mandatory. You don't have a choice. And this also will afford you lifetime payments once you've achieved the appropriate retirement age and have met all the minimum requirements. Thrift Savings Plan is a tax-protected savings program. It's based largely on what you put into it. It's managed by the Thrift Savings Board. We cover the Thrift Savings Plan in another video. Your contributions to the FERS program depend a lot on when you were first hired under an eligible program and what your prior covered service may have been. Congress has amended the FERS program twice in the past few years. It did not change the benefit, but it did change the employee contribution. The first part of the program was the regular FERS employee. This would be indicated by a K retirement code. We'll look where you can find that. When they amended the program, they called it the FERS Revised Annuity employee. Those employees hired after 2012 for the first time pay a higher percentage into the program. Then they amended this program again in 2014. Those are called FERS Further Revised Annuity employees. This will be indicated by a KF. We'll show you where that is found, and they pay an even higher percentage in. It's extremely important that you make us aware of any prior covered federal service you had, either with your current or former agency. We need to be able to verify the coverage and the duration of that coverage in order to put you in the appropriate program. Also, if you're covered under the law enforcement firefighter special retirement, you'd have a corresponding M, MR, or MF to correspond with that K, KR, or KF. Those programs also had changes to the contribution amounts. On your SF50, you can find under the retirement plan field the code that we were just discussing. K would indicate FERS or FICA. If you're under KF, that would be the Further Revised Annuity employee. KR, Revised Annuity employee. This would also show M if you were covered under the Special Firefighter Law Enforcement Retirement Program. You can also look on your leave and earnings statement to confirm information about your retirement program withholdings. This example is for a regular FERS employee. That would be indicated by K on their SF50. You can see they're paying 0.8% for the FERS retirement. You can see the current and year-to-date contributions. You can also see the Social Security tax contributions. In case you've ever wondered, OASDI stands for Old Age, Survivor, and Disability Insurance. You can also see that on the current and year-to-date basis. Benefits paid by the government are amounts paid by the government on your behalf to these programs. This isn't paid directly to you, but you get the benefit of it when you're ready to retire. This is a good moment to point out that while you are automatically enrolled in the program, you have the option of designating beneficiaries for lump sum payments should you pass away. You can complete this SF3102 beneficiary form and return it to the Human Resources Office. When you complete it, please complete it accurately with your name, date of birth, social. You may designate anyone whom you like. It can be more than one person. There are instructions on the form. Please sign and date it. Make sure that your totals add up to 100%. Make sure that you have 2 witnesses sign it who are not beneficiaries. Once you return this to the Human Resource Office, we'll review it and we'll put it in your EOPF. Let's go over a quick example of the FERS pension or annuity computation. This is assuming that this is a voluntary unreduced retirement at age 62 or later. They're going to look at your high 3 average salary, that's the 3 consecutive years in which you earned the most, times 1% times the years of creditable service. Creditable service includes the time which you were covered under the retirement program and also a few buyback options and sick leave, which we'll discuss later. So in this example, we're going to assume that your high 3 salary average was $50,000. There were 30 years of creditable service. So that will be $50,000 times 1%, $500, times 30 years of service. The annuity would be $15,000 a year. The actual computation is a little bit more complicated, and of course results will vary depending on how old you were when you retired and other contributing factors to the calculations. Service deposits. This is where you can get credit for other federal service, military, some civilian, and this will increase that annuity multiplier, the number of years of service. If you are active duty military with an honorable discharge, not retired, and have supporting DD-214s or other documentation for that, you can potentially buy that time back towards your annuity multiplier. Peace Corps volunteer service and Americorps service under certain circumstances is also eligible for that civilian buyback. You can purchase back civilian service under temporary appointments. This would be appointments that were not eligible for retirement prior to January 1st, 1989. That temporary time after January 1st, 1989 is not eligible for buyback. You can also redeposit service. So if you were covered under a retirement program and you left federal service and withdrew that money, you can deposit that money back into the program and that will be creditable towards your retirement. If you don't make a redeposit, it's not eligible. Requesting service deposits. You can do this by calling the benefits branch. You can also create a work order through the OnTrack system. You go to this address. This isn't a live link. You'll have to type it in or go through the Employee Center, and it'll walk you through creating a work order to do a civilian or a military buyback. Military service deposits. Depending on what branch of the service, not a problem. As long as you have documentation of that active duty military service, we can help you with your buyback. It'll increase your annuity multiplier. It's probably not a good idea if you're retired military because you'd have to give up your military retirement in order to be able to apply that to your civilian retirement. A brief overview of the process: we would request your military earnings based on your DD-214s or other appropriate documentation from the Defense Finance Accounting Service. Once they return that to us, we would do a complete service history for your civilian service because you're not eligible to make this buyback until you're covered under the retirement program. There is basically going to be 3% of your military earnings plus any interest. There's a 2-year grace period from when you're first eligible under a retirement program to start the buyback where you don't have to pay interest. After that second year, interest will start accumulating. So if you had your military service, you started working under the FERS program, say 10 years ago, you're going to start accumulating interest from 8 years ago. That doesn't mean you can't do it. It just means your payment will be slightly higher. Peace Corps and Americorps service. This is for your volunteer service. You can make a deposit based on your earnings for your readjustment allowance while you are in the Peace Corps or Americorps. There are specific requirements. We'll help you work through those. If you are interested in doing this, please make sure that we're aware of your Peace Corps service. Sometimes people don't put that on a resume or provide documentation. Documentation will help you request from the Peace Corps or from Americorps. There's also the service history. You're eligible to make the buyback the first time you're covered under the retirement program. After that, a certain amount of interest will accrue. Peace Corps and Americorps service, interestingly enough, can also determine which of the K, KR, or KF programs that you're enrolled in. So please make sure that we're aware of any Peace Corps or Americorps service that you had. The service deposit for temporary time prior to January 1st, 1989. We have to document this time through SF50s. If it was a long time ago and there's a break in service, we can help you track down that documentation either from the National Archives or from another agency. There are no options currently for buying back post 1989 temporary time that was not covered under a retirement program. Sick leave. Unused sick leave, if you work up to the time that you retire, may be credited towards that retirement multiplier. If you're one of those folks who can save up 2,000 plus hours of sick leave, that's like adding an entire year to that annuity multiplier. That sick leave does not have to have been from a covered retirement position. So if you worked as a temp employee for 10 years and saved up a lot of sick leave, that time's creditable as well. Unused sick leave should be credited back to you if you had a break in service left and returned. So you would want to check your accumulated sick leave on your leave and earning statement and make sure that that's an accurate amount. If it's not, we can help you track down the documentation of that and have it credited to you. Also, unused sick leave should follow you if you came from another agency. Please verify that that sick leave has showed up on your leave and earning statement. In order to apply to retire, you have to meet a few requirements. Generally, you're going to need 5 years of creditable civilian service, and this would include your Peace Corps or Americorps time, to be eligible to retire. If you're a term employee that works for 4 years and leaves, that's not going to qualify you to be eligible to retire even for a future retirement. The age requirements may vary with lengths of service and how old you actually are. Circumstances when you want to retire, these pensions are for life. It's not like you work for 30 years and end up with a 5-year pension. There are also survivor options. There are voluntary retirements, disability retirements, deferred retirements, and early outs. We're not going to discuss those here. We do recommend that you visit the opm.gov page about retirements. You can find information here about your specific retirement program, whether you're in CERS or FERS. There are calculators available to you, and there's a lot of very helpful frequently asked questions. This is the example of the FERS page. It'll cover your eligibility computations. There are calculators, creditable service explanations, and it'll also examine the different types of retirement for you. It'll tell you what you can do for survivors and for other programs such as military service buybacks, civilian service buybacks. Frequently asked questions will answer questions that you have not even thought to ask yet. Very worthwhile to invest a few minutes every week to learn about what you can do now or 40 years from now. Finally, Social Security, we don't manage that program. If you're interested in more information about it, you can visit the Social Security Administration website at www.ssa.gov. This is not an active link, and you can apply for some of those retirement computations. On their website here, there's retirement estimators, quick calculators, life expectancy calculators. They want to help you. We don't administer that program. You'll need to do that through them on your own. Finally, understanding the thrift savings program, we addressed that in another video. There are a lot of moving parts. It's very worthwhile to invest the time to understand this program. It's going to constitute the bulk of a lot of people's retirement income.